What is up, guys? This is going to be one of the strategy series videos, or the strategy videos that's going to be inside of the Discord. This one is going to be called risk to reward. A lot of new traders struggle with this concept as they don't know what a good risk to reward is. But how do you locate areas on the chart to find those good risk to reward setups? Well, in this video, we're going to discuss that, so make sure you stick around until the end. Alright, so here we're going to use Bitcoin on this example. We got a big breakdown today on this, and you can see that we are currently testing support. If you don't know what support and resistance is, please go look at the video that I titled Support and Resistance, as that'll kind of help you get to this part of the understanding. You can see that we are testing weekly support. So being a new trader, or any trader for that matter, how do you locate regions on the chart where, there is a good risk to reward? Is there an opportunity to take a trade here looking to make more than you could potentially lose? So how do you do that? The way that I suggest you do it, or the way that I do it, is I look for these areas of resistance. Now, typically in day trades, I am looking to target the daily high or the daily low, depending on the direction of trade I am taking. If I am looking to go long on a certain asset, I am typically targeting the daily high, the day that I'm trading on, that day's high. If I am looking for a short, I target that day's low. Since Forex and crypto trades 24/7, or 24/5 for Forex, 24/7 crypto, every time the New York session opens, you're going to have already a high on the day or a low on the day, and those are going to be my targets. However, we have to notice and be able to identify where those key support and resistance levels are. The two best time frames for intraday and intra-week trading to identify support and resistance would be your daily and weekly areas. All right, so with that being said, here we are at a weekly support. We know we don't want to take any new shorts in this area because you never short at support. Let that little rhyme sink in. You never short at support. And yes, I coined that term. Never short at support. So we're not looking to take any short entries here. But what if I'm bullish on Bitcoin? Never mind the downtrend that we're in. Never mind the consolidation. Never mind any of that. We'll get into that in a little bit later. But how do I identify what would be a potential good risk to reward? All right. So first, risk. How, if I want to go long here, I know I don't want to go short because it's in a support, but if I want to take a long here, if I want to chance it or risk losing money to enter into a trade to potentially, double my money or double the position, not the account size, the position, I want to risk 1% here. Where am I going to look for that stop? Well, typically, depending on the weekly range or the daily, whatever you're taking your trade on, the time frame matters. You're going to basically use that candle's low. All right, but this is the thing. For the risk, once you understand where you're going to put your risk, and you typically want it to be below the low if you're looking for longs, is there a good reward, a potential reward? Because we don't know where price is ever going to go, so this is how we trade inside the range. This is how we identify high probable regions to look to take trades, and then this is also how we base what our potential stop, loss, or risk is versus our potential profit or target is. So in this scenario, you can see that here was your old weekly support. All right, it's the lowest bearish close in this sequence of price. When price comes into the level it tested it last week and bounced. This week it opened and we got a push higher first before the final breakdown. Now, since this is a weekly chart, we don't know what's going to happen with this weekly support zone because this candle is still going and there is still 3 days left. And you should always wait for the close, but a lot of scenarios you're going to miss the trade. So I will leave that up to you, deciding on how aggressive you want to be while taking these entries. So one scenario would be to wait on the weekly close and see, does it close below this support or does it close above the support? If it closes above the support, then that means you're going to have a big long wick, and that means your stop is going to have to be wider. So being more aggressive will give you that opportunity to make your stop loss smaller, but you cannot execute a trade unless that risk to reward is skewed to at least 2 to 1. So that means if you're going to risk 1%, you need to be able to make 2% on the trade. Now that doesn't mean it's going to work. That just means you have to identify an area on the chart where there is no daily or weekly resistance or supports that could potentially make that trade fail. So since this is your last support zone, this is your target. All right. This is your target. Now on the day trades, I would say you'd be targeting the daily high, but this is a weekly time frame. So a lot can go wrong in the span of 7 days. So in this scenario, for this swing trade, I need to look for my stop loss, which we've already identified as the low of this candle, and I've already identified my potential target, and that would be this support. All right, we don't know if price can get above that support, so that has to be your target. Now if I come over here to my long position tool and I put my entry here, bring my stop up to just under this candle's low, what I'm looking for here in this red box is 2.0. That means it's a 2 to 1 risk to reward. If this number is 9, that means it's a 9 to 1, but that's not likely, or not really going to happen. So if I pull this down to this old support level, you can see that this trade, this current setup, is exactly a 2 to 1 risk to reward. So we have one check in that box as far as the risk to reward is decent. It's a 2 to 1 risk to reward, right? So basically if you take the entry here and price continues, you get stopped out. But if price stops here because it is at weekly support and continues higher, then all you're targeting is the next area of resistance. This would be considered a decent trade as far as risk to reward goes. You've identified the support potential resistance, and you have identified a decent stop loss with a target of 2 to 1. That is identified as a decent setup. Would I take this trade? Absolutely not, because Bitcoin is in a downtrend. Understand, I would not take this trade as I am short, because in a downtrend, you look to sell resistances, and in an uptrend, you look to buy off support. So since this is in a downtrend, the trade would be looking for resistance levels to get short, and then looking for potential supports to target. Hopefully what I said there just makes sense. All right, so this trade as identified is a good risk to reward. However, the market conditions does not support a long entry based on the trend. All right, so let me go over here and find a short entry. Okay, welcome back. Here we are again on Bitcoin. We're going to use the same example as we're going to use a trade that I took yesterday. Let's go on and see what we got here. So basically yesterday we had FOMC and the meeting was hawkish, but yet we got this bullish price action. So here is resistance. I've identified daily resistance. We are now on a daily time frame. I'm looking for an intraday trade, and typically on my day trades, my target, if I'm looking to go short and this is the day we are looking to take the entry, then typically you're looking for a low of day target. However, there is an obvious area of old resistance right here. So basically what I have to do now is that I know that I'm looking to take my entry at daily resistance, this daily resistance at $39,743.22. What I must do is see if there is a decent risk to reward before I can take this trade. Now, everything is working for me as far as trend is concerned. We are in a downtrend, so the short trade makes sense. We are at resistance, so the short trade makes sense. Let's see if the risk to reward makes sense. So pulling up my risk to reward tool over here, we are going to click on short position. And mind you, I took this trade. Okay. Now what I'm going to do is I'm looking to see if I put my stop over this daily candle's high, can I get a 2 to 1 risk to reward before we get to the next area of potential support. So I would bring that up and voila. As you can see here, by me taking this short trade at resistance, resistance, looking for trend continuation, the risk to reward is decent, meaning instead of targeting the daily low, I have obvious daily resistance here. Plus, if you're familiar with the strategy, this bearish candle's open acts as what we call a Heath level or a demand zone. So that's where my target is going to be. And since there is a 2.15, then that means this is a 2.15 to 1 risk to reward. So if I'm risking 1% on this trade, there is an opportunity for me to make 2% on this trade before we get to support. And boom, that's what we're looking for. There are other things that I use to basically help me identify my bias, but this video is basically only on identifying risk to reward places. All right, so let's go use something, and obviously if I just click play, you'll see that this trade worked out absolutely beautiful. So another thing that I do with my strategy, which you will learn later on down the road, is I never close out the whole entire position. I always leave on at least 1/3 of the position size or 25% of the initial trade. So basically when I hit my take profit level, I am exiting with the majority of the position, and then I am moving my stop to break even, as this allows me to catch a potential trend continuation. As long as my stop is up here and the candle pushed way deeper than my target, since I don't know what price is ever going to do, I must stick to my rules-based strategy because we don't know what price is going to do. There is nothing that will tell us if price is going to stop here and turn around. And it's possible. It has happened many times, and it will happen to you many times. So once you start to learn this strategy, I want you to identify, is this a good area to take a trade or not? Because if there isn't a decent risk to reward setup, and it must be 2 to 1, then you are leaving the trade alone. You are waiting for another setup to come to you. Do not chase price anymore. You are trying to learn how to be a profitable, successful trader. So just listen to what I'm telling you and you can get there. So basically that trade worked out good. I have moved my stop to break even, and now I am in the trade. Yes, it is a smaller position, but if this thing continues for 5 or 6 more days to the downside, that trade will end up paying me more than the original trade did. And the best part about that is I literally have no risk on the table. It is literally risk-free minus the unrealized P&L. None of my money can be lost once I take profits and move my stop. Now, all of the unrealized P&L that I haven't taken can be lost, and that is in a sense risk, but from the initial position taken, my account is not in any danger of taking a negative hit or a red trade. All right, so let's move on. All right, so here is a setup that didn't work today. Basically what I was looking at is I was looking for a trend to continue to the bullish side, simply because we took out resistance with a close on this day here. Boom, boom. So on this day, I was looking for a potential setup to get long. So let's go ahead and put on our bar replay tool here and block out this candles, or the today candle and the new candle that just started, and let's go into the intraday chart, as I am an intraday trader, meaning a day trader. Now here we are. This is not where we are. We want to get to where we were today, and we were today was around boom 6, 7, 8, 9 o'clock in the morning. All right, so when I come to the command center, this is what I'm looking at. Okay, this is the price action that I am seeing. I know that down here is daily or potential daily support. So going back into the hourly time frame, old resistance, potentially new support. You can see that we're nowhere around the daily support. If we go back into the daily chart, you can see that we're actually right above an old resistance level. So since this is the highest close in all of this sequence of price before this breakout, that would be your old resistance level, and that's where you're going to be looking to see what's going on. So now that we have those two daily levels at or on the chart, we know that this is potential support. We know that this is potential resistance. Does this trade look like a buying opportunity to you? Well, the rule that we have that I said at the beginning of the video, which is never take a short into support, that rule proceeds to the long side as well. Never take a long at resistance. We are not breakout traders here, all right? Seeing how we closed bullish and everything looked bullish, this was a mistake on my part. There is no daily levels anywhere near where price is currently trading, okay? Go back to the daily. Forget about this bearish candle right here, all right? Because that's not made yet. The reason it's there is because we have progressed inside of the intraday charts, but that is an old resistance level, and we did close above that level too, but the problem is price is currently trading below it, all right? So if I wanted to take a trade here, I would revert to the old way, the same way. I will find support and resistance on the intraday time frame. Right here is support, and then here would be resistance. So I know it's going to be a little cloudy and murky. Let's get rid of the daily level. So this would be my potential range, right? Forget the daily levels there because we will discuss that, but here we are. So the risk to reward, is it valid? Can I look for a long here and say put my stop under that swing low, and will this risk reward be good enough to take intraday? I know that's resistance, so that typically has to be where my first target is, at least. Even though my target would be high of day, we know that resistance is there. So is this a valid trade to take? The answer is no. You do not have a good risk to reward. And if we go back to the daily time frame and we throw on that old daily resistance, and then we go back into the intraday time frame, there's the old daily resistance. That trade is skewed now. Not only is it not a good risk to reward, it means you are risking 1% potentially to maybe make 0.65%, which is less. So that risk to reward is not good. So let's play out and see what happened on today's price action. Remember, I am human and I make mistakes, but I find these mistakes at the end of the day, looking back in hindsight and seeing what I did wrong. If you can start doing that, it could go a long way to help you in becoming a better trader. So first and foremost, what we see right off the rip is we know it's not a good trade to take, so we're not going to take it, but we can still watch price to see how it reacts. We know this is a daily level. Come over here. Basically, if you click on the line, you brings up this toolbar. Now, I don't know where this toolbar will be for you. I just move it. You know, it might pop up over here, over here, over here, or wherever. I just move mine out of the way, go into the settings cog, type in D as for daily. You could type in DR for DRES or whatever, and over here you can see that it's daily level, and then I know that's an hour and that's an hourly. So now we're at 7 o'clock, so that means we're in the time span allotted for our day trades. Let's see what happened today. Boom. So we know that the risk to reward was skewed to the downside, so that means we probably should have been looking for a short instead of a long based solely on risk to reward, because remember, the potential reward if taking a short entry to the next daily level is all the way down here. Does price go test that level? Boom, right there it was. Okay, so basically what we learned, I was wrong looking for a long position at resistance. I should have known that right off the bat, but like I said, I'm human. But the risk to reward was skewed to the downside, so I should have been looking for downside entries. And you can see clearly here, this was a fantastic downside entry, and it even gave us an opportunity to get short at any one of these hourly tests of daily resistance. Alright guys, hopefully this video helps. This is just the very beginning of these new style videos, so they will keep coming. Make sure you guys trade safe, make sure you trade smart, and as always, happy trading everybody.